Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing well and has a nice warm mug of coffee nearby as we kick off this week. It will be an interesting one. We have two major inflation metrics coming out this week. And the first one is the PCE, and the second one will be the University of Michigan inflation expectations. Now, of course, there's data throughout the week. So far, the calendar looks pretty darn quiet in terms of FOMC speak. So that's actually probably pretty good, since a lot of those speaking engagements have been the reason for so much volatility. Nonetheless, we sit kicking off the week with an expectation. Here we go. With an expectation the Federal Reserve is going to hold in May. That's no surprise. The adjustments really have been the firm hold now that we have 83% in June, and even July is looking more like a hold than a cut. And if you're wondering, why are equities so upset about this? Because if we were expecting lower rates sooner, now obviously lower rates are coming later. And then that starts to beg the question, how many rate cuts could we get in just a September, November, and December meeting? So obviously fewer, right? So when we look out to December, this is not firmly a 2 or 3 or 4 rate cut cycle before the end of the year, as to where we stand right now on April 22nd. But, when folks ask, well, why are the equity markets in such a bad mood? Because we expected something and we didn't get it. And that's how humans behave, right? We wanted this, we got that, and we're going to respond to either it being better or it being worse. And in this case, this is quote unquote worse, because that rate cut is not coming till much later, and it does look like much fewer. And you can see what it's done to the equity markets. You can see what it's done to the indices. You can see what it's done to the NASDAQ, the S&P, the Dow. But not everything is in a mess. Not everything is choppy. And by the way, for those of you that are wondering, okay, Rog, is this choppy or is this a downtrend? Let's go to our charts, right? Let's always gauge. There's always three things we have to look at: momentum. Actually, I should start at the beginning. Sentiment, momentum, and trend. Sentiment, momentum, and trend. The most important is trend. The second most important is sentiment. And really, momentum is probably the least important of them, but it is part of the overall formula. It is a part of the overall mindset of the way the market moves. So where is the trend? Right now, the trend as of this Friday candle right there is an oversold daily price movement range floor for now. It doesn't mean that we're up and away, but it just means there's a floor right now, and we would expect to bounce with you can see right down here, this level starting to not only move below the low, which is right there, but you can faintly see. Let me show you here. You can faintly see, just out of sight. There you go. You can see that signal that popped up on the 19th. So that would be, at least for today, and at least for a little while, perhaps, bullish. What will be necessary is for this to continue higher, for the daily price movement ranges, that gray zone, to also continue higher, not go lower. So there's a lot of things we're going to look at as we go from Monday to Tuesday, Wednesday to Thursday this week. Are we seeing that gradual improvement? And are we ultimately going to expect what we have right now to ultimately be the range? And so what is the range? Well, notice we have a lot of automated support and resistance levels here. All right, so I know the resistance is still up in this area, 2 Darvis levels there. I know there was support down in here. By the way, there was support at this level as well, but we broke it, right? So it's not support. Isn't that interesting? This previous Darvis level did hold. So we don't have to draw things manually. It's amazing how often things like Darvis levels and even minor highs and lows can help us identify where support and resistance may be. And we actually have the possibility for a minor low here if we can take out the Friday high. So we'll keep an eye on that as we go forward. That's what's happening on the ES, and we're getting basically versions of that happening also on the NQ. All right, so it's not necessarily time to be just bullish, but it is time to, here we go. It is time to think about why, right? Why we are looking at a potential bounce. And let's go to again, the trend. The trend was bullish, whether you're looking at the S&P, the NASDAQ, the trend was bullish. And now you can see it's gone neutral, right? It's gone neutral in here. We do have bearish momentum, and we know that we have bearish momentum with all the red candles, but we're not moving in a downtrend, which is very different than, this is why we separate sentiment from momentum from trend. So bearish momentum, neutral trend. Now let's talk about sentiment. Sentiment is something we take a look at every single day. And, this is something we can do through a number of things, number of processes. It's not even a fancy thing. It's a pretty simple thing. First thing we're going to do is simply ask ourselves if we're above or below the previous session close. I mean, that's the first thing we're going to look at. I'm going to look at Friday's close, which was way down here. All right. I'm going to look at Friday's close, and I'm going to ask myself, am I above or below it? Now, this is a process that we've been teaching since I did a class back in, 2022 called the Day Trading Playbook. Some of you might have been there for that. It was a, classes are supposed to be 4 hours. I got carried away, I think, in that class. I think I went for about 6. But we did a thorough, absolute mind meld brain dump of things, all things day trading in that class. And one of the things that we talked about was sentiment. Now, this idea of a line in the sand was also introduced around that time, around 2021. And, there's lots of ways we can take a look at sentiment as a line in the sand. Here we can look at the previous session close. We can also consider things like the clearing range. Are we above or below the clearing range? Are we above or below the initial balance? These are all very simple things that you don't need anything other than time and price to analyze, right? So clearing range is the first 30 minutes after the bell. The initial balance is the first 60 minutes after the bell. The previous session close is exactly like I say, the previous session close. So these are all just that idiom of, hey, are we above or below a key level? Other things that get a little bit more advanced. So this is really simple stuff. A little bit more advanced would be things like an anchored volume weighted average price. Another thing would be something that I call the V score. Another thing that if we're opening near or at an hourly price movement range. So these would be more slightly advanced things. But the most basic things you can do is track those 3 things: previous session close, the clearing range, and the initial balance. And we actually have tools, and we've had them forever, processes and tools. Not everything needs to be automated, right? But whenever I do have a process, the first thing I get asked is, okay, Rag, can we automate that? And I fought a lot of times automation because I want there to be a really tactile feel to trading, meaning that I think about, when I do my clock here, I think about how I started trading, and it was very much pen and paper and kind of old school. And you get a really good feel for price action when you have to crunch your numbers and do the process manually. And maybe because I've been doing this for 30 plus years, I have that old school pen, paper, calculator kind of mindset. And sometimes, yeah, I'm probably guilty of that. But over time, we've been automating a lot of this. There's your clearing. We can look at the initial balance. We can look at the clearing range. And those are things that if you're in the Sector Secrets Mastery, go grab the clearing range tool. It's in the files there. And I'll see you all in just a few minutes so we can talk about that then. So we've automated a lot of these. We have the previous session close. I know a lot of you have automated this yourself because, my gosh, how more basic a thing can there be other than a previous session close? So this is part of the layout, right? It's for those of you looking at it in the Sector Secrets Mastery, and I'll see you there in a little bit. That's part of the shared layout that is inclusive of all the cool tools we make available in the Mastery. So once you download that layout, this will automatically upload. All right. So quick question. Is the previous session close the same for futures and equities? So let me talk about the sentiment that I'm measuring. I'm measuring Wall Street sentiment. Right? That's really what it is. So the question is, when we look at that previous session close, we think about all those different lines in the sand, whether that be, again, something more advanced like hourly price movement ranges and V score and anchored volume weighted average prices, or are we looking at things like initial balance, clearing range, or previous session close? what we're always looking at time. So the time that I like for previous session close, and I'll stick with what I taught back in 2021, 2022, when we introduced this as part of our morning sort of sentiment read. I like using the cash close, and that's what I'll focus on, the cash close. And the way that we do that is we just look at where the close is at 4, right? Eastern. So really simple, really, really simple in that regard. And I mean, you can eyeball that too. But the cool thing is that once you know where that is, let's take a look at it with bonds here. Let's see what the bond market's up to. Yeah, so let's see what the bond market's up to. When I take a peek at the, oh, you know what? Let me 1 moment. Let me go to the daily here. I'm on the 5 minute still. Let's go to the daily. All right. So when I'm looking at the daily chart here, and I'm looking at where we are on the ZB, look, if you want to make it really easy, if you don't want to turn it into an indicator, totally up to you. It's, again, about the most basic thing we could look at. See that right there? Where do we close? Right there, right? The top of the body. And if you would extend that over, that's your previous session close. That's one easy way to do it. But again, if you want to look at the cash close, that's what I would focus on. So if we take a look at gold here, where's gold this morning? Gold is definitely weaker, and I don't need any kind of indicator to tell me that gold is down, but it is down, and you'll see that it's down from the close that we saw at 2406.7, right? And by the way, that's all that it is. If you take a look at the top of this chart here where it has the symbol, the date, and then the open, high, low, close. That's it. 2406.7. Are we below it? Yeah, we're 2.18% below that right now. So below that sentiment line. But below that sentiment line in an overall trend, this is already on gold looking like a potential higher than normal volatility day. So warning on gold. When we talk about volatility, let's talk about volatility for a moment. We talked a lot about sentiment here. Let's take a look at volatility. Yeah, are we getting a potential buy signal on gold today with that move lower? And I'm going to keep an eye on this. See that how that daily price movement range has stacked? See, it's overlapped. All right, that is far higher than the 68% probability of movement in gold futures. And that's going to map to what's happening on GLD or even micro gold. So be careful here, gang. This is not a quote unquote normal day in gold. And it's normal days that we all love. Whether they're up or down, that's fine. But when they're exceeding that 68% volatility, things get very, very difficult. So heads up on this one. What I would also say is if you're looking at gold, I would also take a look at GDX. I would also take a look at some of the stocks within GDX. We're going to open down at 3271 today, which is already, take a look. This is also because of gold. Take a peek. We're going to be exceeding that daily price movement range from Friday. We'll see where we are in relation to today's daily price movement range, but be careful in gold. It might make sense to give this first session after OPEX maybe a little time to simmer down and focus on things that are not moving outside of their volatility ranges. And I'm sure there are some things that are not. Let's go take a look at energy. Let's go take a look at XLE. What's XLE up to? All right, what do we have here? All right, so XLE right now, you can see what we'd like to focus on is whether or not XLE can simmer down and give us possibly another opportunity that looks a lot like this right here. This is support. Not the prettiest support I've ever seen, but this is oversold support in a neutral. You can see here all that gray in a neutral environment. So I'd like to see an opportunity like that in XLE, maybe Exxon, maybe Chevron. Heads up, though, we're wandering into a closing window between where we are today and earnings. So make sure you know if you're trading an individual stock, or if you're trading a stock that's heavily weighted in one of these sectors, remember the disproportionate amount of movement. So yeah, Bill, I am looking at gold, but be careful because of that higher than normal volatility range. We might be better off looking at things like copper and crude, maybe silver, maybe the XME, right? So maybe metals, but not necessarily gold, maybe silver, copper, XME, crude, XLE, XOP. We might direct our attention in those places. So what do we have here? This is also down today. Take a look at where crude is. This is also down today. So we're starting the day in what I would call the bearish hemisphere. And why do we want to know where sentiment is at any given time? The reason we want to know where sentiment is really simple. Raghee, why know where we are in relation to above or below the initial balance, or above or below the clearing range, or above or below the previous session close? Why have these lines in the sand ready to go? Because the probability for follow through is why we watch these things. Why have I taught these things for so many years? Why do I look at some of these very basic things? I mean, those three things that I just mentioned are really simple things. They're price and time, right? They don't need anything more than price and time to calculate. And then I step back and look at 10 o'clock. Are we above or below the previous session close? Are we above or below the clearing range, right? That stops at 10 o'clock. We'll know. And then at 10:30 Eastern, I can ask myself, are we above or below the initial balance? So the more of those that are clearly above, the more of those that are or clearly below, I have more clear sentiment. And that is for follow through. That is for continuation. That is for the likelihood of buying a call and it appreciating in value, or buying a put and it depreciating or appreciating in value while the underlying moves lower, right? So it's all about follow through at the end. These are not magical levels, right? These are levels that have been in play for forever, right? These are just different ways that broad groups of market participants can say, oh, this is bullish or bearish. Because remember, at any given time, what is everybody doing? All of us. Is this bullish or bearish? Therefore, do I want to buy a call or buy a put? Do I want to get long or do I want to get short? Notice that every single question we ask sort of distills down to, what do I want to do now? Which direction do I think I want to be in? And which direction would we consider the follow through greatest in? And that's where those three, and then add on things like hourly price movement range, V score, anchored VWAP. Those are all things that we would look at for, again, just different types of these sentiment reads, these lines in the sand. So that's really where we sit right now in crude. And what does initial balance mean? Aman, it's just a name. So yeah, great question. So what is clearing range? We talked a lot about the previous session close. What is the clearing range? That is the high and low that is established between 9:30 and 10. Some people will say 9:50. I like the first 30 minutes as the clearing range. The initial balance, again, is just a general trading ism. It's just a way that some folks measure the importance of highs and lows between certain times of day. And this is the high and low established between 9:30 and 10:30, the first 1 hour after the bell. And again, that goes back to the psychology that we talk about, that cash session, cash open, the cash close. And these are all geared towards that cash session, whether that be PSC, whether that be clearing range, whether that be initial balance, right? It's all geared towards that, the importance of the cash session. Initial balance, I'm sure someone could get into all that, detail of, this is what's happening. All I know is all I need to know. All we need to know to find it on a chart is time and price. And that makes it really, really easy. All right. So what else do we have here? On a question on Disney. Sure. Before we wrap up, I would be careful with Disney. Disney was in a trend for a long time. And like a lot of things, it lost the trend. You can see the green to the gray. Do I still want to buy Disney? Largely, yes. But I would probably focus on one more session to confirm the secret squiggle is oversold. I mean, it is oversold. If you want to wait for a signal, that's cool. I only use this in non-trending environments though, gang. And then that would mean I'd also need price to be down in that gray area of the daily price movement range. All right. So as always, gang, thank you so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. Be good to each other.